Economic and market impact of spectrum allocation. Spectrum allocation has significant economic and market implications, influencing everything from telecommunications pricing to innovation, competition, and economic growth. As the demand for wireless services continues to rise, driven by technologies such as mobile broadband, 5G, Internet of Things, and connected devices, the way in which spectrum is allocated, licensed, and utilized directly impacts the broader economy. Below are the key economic and market impacts of spectrum allocation. 1. Boosting innovation and technological advancement. Enabling new technologies. Efficient spectrum allocation provides the foundation for the deployment of next-generation technologies like 5G, 6G, IoT, and autonomous vehicles. By allocating appropriate frequency bands for these technologies, governments enable telecom operators, tech companies, and startups to innovate and develop new products and services. Enhancing wireless services. Spectrum is the lifeblood of mobile and broadband communications. Access to adequate spectrum allows mobile operators to increase data capacity, improve coverage, and enhance service quality, which benefits consumers and businesses alike. For example, 5G networks require substantial spectrum across various frequency bands, with lower frequencies for broad coverage and higher frequencies, millimeter waves for high-speed data in dense areas. Support for IoT. IoT devices, ranging from smart home appliances to industrial sensors, require spectrum for communication. Proper allocation of low-power, short-range spectrum bands, such as 2.4 GHz and 5 GHz for Wi-Fi, is critical for the growth of the IoT ecosystem. The availability of spectrum also affects the deployment of smart cities and connected infrastructure. Second, market competition and consumer impact. Competitive pricing. Spectrum auctions can lead to more competitive markets, particularly in the mobile sector. When multiple companies bid for spectrum rights, competition can drive down prices for consumers. This has a direct impact on mobile data prices, broadband access, and consumer choice. Conversely, if spectrum is monopolized by a small number of players, it could result in less competition, higher prices, and poorer service quality. Market entry and barriers to entry. For new entrants, the cost of acquiring spectrum can be a significant barrier to entering the market. Auctions and licensing processes often require high upfront costs, which could limit market entry, particularly for smaller players or innovative startups. This can reduce market diversity and lead to more concentration of power in a few large telecom firms, stifling innovation. Dynamic pricing models. As spectrum becomes more valuable and operators look to manage congestion in high-demand areas, spectrum pricing can become more dynamic. In some regions, the development of spectrum leasing and sharing models allows operators to buy, sell, or lease spectrum as needed, enabling better use of spectrum resources and potentially lowering costs for businesses and consumers. 3. Economic growth and productivity. Contribution to GDP. The telecommunications sector is a major contributor to national economies. Spectrum is critical for the functioning of this sector, and its efficient allocation leads to better communication infrastructure, which drives productivity across industries. For example, mobile broadband supports business operations, enabling workers to access data remotely, collaborate globally, and manage operations efficiently. E-commerce and digital services rely on robust mobile networks to deliver services and goods to consumers in real time. Job creation. The telecommunications industry, bolstered by proper spectrum allocation, creates a wide range of jobs. This includes direct jobs in telecom infrastructure, e.g., engineers, field technicians, and customer service. Indirect jobs in sectors like retail and service delivery, and the new jobs created by enabling digital transformation in other sectors, such as healthcare, finance, and transportation. Boosting rural and remote economies. Proper allocation of spectrum for mobile broadband in underserved or rural areas can stimulate local economies by providing access to digital tools and services. Spectrum policy that favors the expansion of wireless broadband networks to remote areas can reduce the digital divide and offer economic opportunities for communities that have traditionally been left behind. Fourth, spectrum auctions and government revenue. Revenue generation. One of the most direct economic impacts of spectrum allocation comes from the auction process. Governments often auction off spectrum licenses to telecommunications companies, and these auctions can generate significant revenue. In 2015, for example, the U.S. government raised $44 billion from the AWS-3 spectrum auction, and other countries like India, the UK, and Australia have raised billions through similar auctions. These funds can be used to support public services, infrastructure development, or reinvested into expanding broadband access across underserved areas. Impact on government policy. Governments also have to balance economic factors when deciding how to allocate spectrum, whether through auctions, direct assignments, or other models. While auctioning spectrum can provide immediate financial benefits, regulators must ensure that spectrum usage aligns with long-term national goals, including digital inclusion, national security, and technological development. Public safety and non-commercial spectrum. The allocation of spectrum for public safety services, such as emergency responders, military communications, or air traffic control, may not generate revenue directly, but it is vital for the proper functioning of society. Spectrum set aside for these critical services can also be used in collaboration with other services, ensuring better response times and coverage. 5. Impact on industry structure and consolidation. Industry consolidation. Spectrum allocation can have a profound effect on the structure of the telecommunications industry. In highly competitive markets where spectrum is limited, operators may seek to consolidate their operations through mergers and acquisitions to acquire more spectrum and achieve economies of scale. This can be seen in the rise of major telecom conglomerates globally, where mergers, e.g. the AT&T Time Warner merger or the T-Mobile Sprint merger, allow companies to increase their spectrum holdings and compete more effectively in both the mobile and broadband markets. Vertical and horizontal integration. Spectrum allocation also influences the ability of companies to pursue vertical and horizontal integration strategies. For instance, a telecom company with significant spectrum holdings might choose to integrate with content providers, offering both communication services and media content to customers, e.g. Verizon's acquisition of Yahoo or Comcast's purchase of NBC Universal. Impact on smaller markets. In some cases, smaller telecom operators and service providers may struggle to compete for valuable spectrum against larger, well-funded incumbents. This can lead to market concentration where only a few large players control the majority of spectrum and therefore the services offered. Regulatory bodies can mitigate this by introducing policies aimed at ensuring that smaller players have fair access to spectrum. 6. Consumer benefits and societal impact. Improved connectivity and service quality. As spectrum is allocated efficiently, consumers benefit from improved mobile and internet connectivity. Faster speeds, more reliable connections, and expanded coverage lead to better user experiences. In the case of 5G, for example, spectrum allocation directly affects how quickly ultra-fast networks can be deployed, which will, in turn, lead to innovations in areas such as smart cities, connected cars, and telemedicine. Affordability and access. Properly managed spectrum allocation can also help improve the affordability of services. Increased competition and efficient spectrum use can lower the cost of wireless services and make mobile internet more accessible to a wider population. This is especially important in emerging markets, where mobile broadband is often the primary means of accessing the internet. Digital inclusion. Spectrum allocation policies that prioritize underserved or rural areas can play a key role in promoting digital inclusion. Government initiatives that allocate spectrum for affordable broadband services can help bring internet access to communities that might otherwise be overlooked by private telecom companies due to the high costs of infrastructure deployment. 7. Spectrum management and long-term economic impact. Sustainable development. As the demand for spectrum increases, governments and regulatory bodies must adopt long-term planning strategies for spectrum management. Spectrum policies that balance short-term auction revenues with long-term infrastructure investments are crucial for ensuring the ongoing development of broadband networks, especially in emerging technologies such as 6G or satellite broadband. Environmental impact. With the growing environmental concerns surrounding digital infrastructure, efficient spectrum use can contribute to more sustainable development by reducing the need for extensive new infrastructure, e.g., cell towers, cables, and base stations. Technologies like dynamic spectrum sharing and cognitive radio could allow for more energy-efficient and environmentally friendly wireless communication. Conclusion. Spectrum allocation is not just a technical or regulatory matter. It has broad economic and market implications. Like, share, and subscribe for more informative and innovative contents from at Zone 11. Peace and stay tuned out.